As you might have noticed, due to the surging gas, real estate, and other prices during the past year or two, inflation has increased a lot since the start of the pandemic. The IRS adjusts tax brackets for inflation every single year. But due to the fact that inflation is hovering around 8% on the year, according to the Consumer Price Index, these tax bracket changes this year will be a welcomed cost of living adjustments for millions of Americans. The new tax brackets were released on Wednesday by the IRS, and in this video, I'm going to break down the new tax brackets as well as the changes to the standard deduction and explain everything that you need to know about the new changes that you can expect on your upcoming tax returns. Let's dive in. All right, guys, let's discuss the tax brackets for individuals for 2023. If you are making under $11,000, then you will be taxed at a 10% rate if you're an individual. Now, if you're making between $11,000 and $44,725, you're going to be taxed at 12%. So that's the amount of money between $11,000 and $44,725. That's going to be taxed at 12%. Now, from $4,726 to $95,375, you're going to be taxed at a 22%. You start to see that there's a big jump between 12 and 22% as opposed to 10 and 12%. Now, directly after making more than $95,376, upwards to $182,100, this amount of money will be taxed at a 24% tax bracket. Any income that you earn in excess of $182,101 up to $231,250 will be taxed at a 32% tax rate, which means that any money in excess of $231,251 all the way up to $578,125 will be taxed at a 35% tax bracket. And last but not least, any amount over $508,125 will be taxed at a 37% tax rate. So these are the tax rates for individuals. And as you can see, there are 7 tax brackets. 1, 2, 3, 4, 5, 6, 7. And the big discrepancy between tax brackets really occurs in this area right here, which is where a majority of the middle class falls into. Majority of the middle class is going to fall in between earning anywhere between $11,000 upwards to about $100,000 a year, which means they're going to fall between the 12 and 22% marginal tax brackets. This is just for individuals. What about for married couples? How does the tax brackets change? If you make less than $22,000, you're going to be taxed at a 10% tax rate. And for the money that you earn that's in excess of $22,000, which would be $22,100, up to $89,450 will be taxed at the 12% tax bracket. So you start to see that it expands for married couples. Now, jumping into the third tax bracket, we're going to take $89,451, and let's see how far it takes us in this bracket. It takes us all the way to $190,750 being taxed at the 22% bracket. So that's a 10% discrepancy and a 2% discrepancy there. Now, when we jump to the 24% tax bracket, that's going to be any money that's in excess of $190,751 all the way up to $364,200, taxed at a 24% bracket. Now, the next tax bracket directly after 24 is 32%. So if you're a married couple making $364,201 or more, this is when the income starts to get taxed in the 32% bracket up to $462,500. Starts to become a lot more room here in the brackets when you're a married filing joint. Now, we still have two more brackets to discuss. We have the 35% bracket and we have the 37% bracket. The 35% bracket takes us from $462,501 up to $693,750. Now, that's a pretty big bracket for 35%, considering when you make over $578,125, you're in the 37% bracket. When you're married, you can make up to $693,000 and still be in the 35% bracket. All right. Now, that means that any amount over $693,750 is going to be taxed at the 37% bracket. So these are the 7 brackets for married couples, right? And these are the 7 brackets for individuals or married filing separate. It's important for us to understand these brackets because these brackets change every single year. But what about the standard deduction? You see, the standard deduction is a deduction that is given to you by the IRS, and this adjusts every single year for inflation. Let's talk through the standard deduction updates as well. The new standard deduction amounts are as follows. $13,850 is the new standard deduction for single filers or married filing separate. If you decide to claim head of household or HOH, your new standard deduction is $20,800. And last but not least, if you claim married filing joint, the new standard deduction for married filing joint is $27,700. Well, if you ask me, Karlton, what was the standard deduction last year? The standard deduction for somebody who was single was $12,900, and the standard deduction for somebody who was married was $25,550. So the standard deductions have changed from one year to the next due to inflation. This is extremely important for us to understand. Now, really quickly, I just want to go over exactly what the standard deduction is in case you're not familiar with it, or in case you don't fully understand it. The standard deduction is a specific dollar amount that reduces the amount of income on which you're taxed. In other words, it is the IRS's way of saying many people qualify for deductions, so we'll just make one general deduction that can apply to everyone who meets this criteria. If you want to take the standard deduction, you cannot itemize your deductions. You'll have to choose one or the other. Some people choose to itemize their deductions because it ends up being a bigger total deduction than the standard deduction. However, many people just take the standard deduction because it is either A, higher than the amount that they would have been able to deduct if they itemized, or B, it saves time and hassle when trying to fill out tax forms. Now, let's talk about bracket creep. This is another thing that I want to quickly go over in this video because it's extremely relevant for this topic. Bracket creep is when inflation pushes taxpayers into higher income tax brackets or reduces the value of their deductions, credits, or exemptions. Importantly, with bracket creep, even though taxpayers are getting pushed into higher tax brackets, they may not necessarily be getting an increase in real income. So, in other words, let's say inflation's at 8% per year. If you get a raise 3% during the year, it could push you into a higher tax bracket. However, with a raise of 3%, you're not actually getting an increase in income when you factor in inflation. In fact, you would essentially be losing 5% of your income. Now, in the current inflationary environment that we live in, you have to be increasing your income by at least 8.2% per year just to stay even when inflation is factored in. The IRS is very aware of this phenomenon, and that is why they adjust the tax brackets and the standard deduction every single year. So even though a lot of people think that the IRS is out to get them, this is the one thing that the IRS does do in order to help people and to keep the playing field level and Given the fact that inflation is very real and is a very significant factor for taxes, we're going to continue to see this go on. So, will you be taxed at a lower tax rate? Many people discovered that they have fallen into a lower income tax bracket in 2023. This doesn't mean that everyone will. After all, each income tax bracket contains a range of income amounts. So to understand this, let's look at two different examples. Let's say that for 2022, you make $90,000. If you make $90K in 2022, then you will fall into the 24% tax bracket. However, due to the income tax bracket changes, if you make the same amount in 2023, then you will fall into the 22% tax bracket. This is because the lower end of the 24% tax bracket has moved to $95,376. This means that you will no longer qualify for the 24% tax bracket and you would fall down into the 22% bracket. Now, let's say you made $100,000 in 2022 and in 2023, you're taxed at the 24% tax bracket for both years. This is because $100,000 is an income amount that falls in both the 24% tax bracket for both years. So in other words, just because the income tax brackets have changed, it's not a guarantee that you will fall into a lower tax bracket. To find out what tax brackets you fall into, you have to carefully check the new tax brackets and see where your income would fall underneath. Then you will know exactly how much you can expect to be taxed at. Will the tax brackets change in 2024 too? The answer is yes. Almost with 100% certainty, the tax brackets will change in 2024, 2025, and 2026, and so on and so forth, especially if inflation continues to rise. You can expect the tax brackets to continue to change year over year to combat inflation. The IRS has to make changes that fairly account for inflation. So if inflation gets worse, the changes to tax brackets will be larger to keep up. But remember, even if you fall into a lower tax bracket, as I mentioned before, in order to keep your inflation adjusted income even, you have to raise your income by the CPI inflation rate each year. Currently, that's around 8.2%. So you also focus on boosting your income too in order to deal with inflation, not just relying on the IRS to change the tax brackets. You can boost your income by getting a side hustle, trying to get a raise, or getting a degree or a professional certificate, starting a business, maybe real estate. It's always a good idea for many people to have multiple streams of income. If you have any questions about the new income tax brackets, or if you're unsure which rates you'll be taxed at, then feel free to get in touch with my company. You can speak with one of my tax professionals, and we'd be happy to schedule a complimentary consultation. Also, if you'd like to join our community, we opened up Tax Alchemy again. You're more than welcome to join our program where we'll teach you how to invest in real estate to offset your W-2 or your 1099 income. That's it for today's video. I hope that you enjoyed it. I look forward to seeing you on future videos. And between now and then, cheers.